Good evening to each and everyone gathered here. For today's event, we have with us our CIO, Mr. Sunil Damania, who will present the topic, Will Bank Nifty Outperform? He'll also explain which stocks might perform well and also whether you should consider increasing allocation in this sector. Please drop your questions in the Q&A box below the video on any concerns you may have on this topic, and Sunil will try answering all of them. Over to you, Mr. Sunil.
Hey, thanks a lot, again, and very warm welcome. My apology today, we are a little late because I was in an investment committee and it took some time for us to discuss something, and it did not realize that time has passed. So my apology for little delay today. It's a very interesting topic. Can Bank Nifty outperform? And I think the reason why we are discussing about it, because if you remember in the month of July and the August, Bank Nifty has done extremely well. The most obvious question then comes to our mind, can it sustain or not? But if you look at last 3 years Bank Nifty returns, you will get an idea that Bank Nifty has underperformed the Nifty 50. So, and sometimes, people do have a observation that if Nifty has to go up, Bank Nifty has to do well, and rightly so, because almost 25% of the weightage in Nifty 50 is from the banks, and if that's so, can it do or not? Can it outperform on a bank stocks? Can they create wealth for the investors or not? If you remember, I did very similar webinar on 6th August 2021. Same month, but last year. And of course, it was 6th August. And if you remember, at that point of time, I said that it's unlikely that Bank Nifty can outperform the market. And the fact of the life is that it has not outperformed the Nifty 50. There is a marginal underperformance, but at the same time, it has not outperformed. And I think that's very significant thing to do. Have I changed my view on Bank Nifty now or not? And what are the way you should look at? See, we always believe in making investors smart. So what I'm going to also discuss with you people is how you should evaluate banks also, because so that you become a smarter investor and you understand. So, banking is a little complex subject. If you ask me, there are many ratios and there are many parameters which many of you wouldn't know. In fact, even I don't know, to be very frank with you. So I look at very simple way to analyze whether banking is doing well or not. And I'm going to discuss that. So the topic is, can Bank Nifty continue to outperform? But before I begin, just a small disclaimer that this webinar is only for an education purpose. Whenever you invest in the equity market, it does carry a little higher amount of risk, and past performance should not be construed as an indicator for the future returns. With this, let me show you how various indices have performed in 2022. And very obviously, power seems to be the darling of the investors, up by 46% YTD. PSU Bank, foreign change has done better as compared to the Bank Nifty, which is more dominated by the private sector, up by 17%. And if you look at Bank Nifty, it's up by 11%. And Nifty 50 is only up by 2%. In other words, Bank Nifty has outperformed significantly to the Nifty. And hence we are discussing about, and then the question would come, but why are we not talking about power? Why are we not talking about auto, which is up by 19%? What is so special about then Bank Nifty? The reason why it is so special about Bank Nifty is that the banking stocks accounts for 25% or 26% of the Nifty 50. Highest being HDFC Bank with 8.36%, ICICI Bank 7.57%, Kotak 3.53% weightage. This is in Nifty 50. SBI 2.69%, Axis Bank 2.54%, and IndusInd 0.9%. And if you look at the overall financial sector, that includes some insurance company and NBFCs, they have a weightage of near about 36.5%. Now, why it is very critical? If the bank don't do well, this six banks that is a part of Nifty 50, they accounts for 25, one-fourth of the Bank Nifty weightage. And the second best sector, which has a higher weightage, is IT, which is only 15%. So now you can understand how critical for Nifty 50 the bank stocks are. I must tell you again right now, in last 3 years, while the Nifty 50 would have gone up by 60% or so, 60, the Bank Nifty would have gone up by only 44%. So while I do understand that the banking stocks are critical for the growth in Nifty 50, but not necessarily. Okay, if the bank stocks don't do well, the bank Nifty 50 cannot do well. That's not the right conclusion we should be drawing it. Now let's look at what happens to the Bank Nifty. The highest weightage has been HDFC Bank, no brainer, followed by ICICI Bank. And I must tell you, 2022, while the overall Bank Nifty is up by 11%, am I right? But HDFC Bank is almost at the same level it was there. So the logic that I'm saying, if the Bank Nifty cannot outperform, then Nifty 50 cannot outperform, not necessarily. Why? Because despite HDFC Bank, which is the highest weightage in Nifty 50, yet Bank Nifty, this HDFC Bank is the highest weightage in Bank Nifty, having almost at the same level, Bank Nifty could go up by 11%. So जरूरी नहीं है कि जो highest weightage company चलेगा तो ही वो index चलेगा. But if you look at almost each and every bank, that bank part of Bank Nifty has participated in this rally, except Punjab National Bank. And what surprises me is again that if you look at the PSU Bank Index, which has done extremely well, and yet Punjab National Bank has not done well. So many times I keep talking to you people. Within the same sector, so your call on the sector may be right, but if you happen to get into a wrong company, give you a classical example. You look at Bank of Baroda, is up by 55% in 2022. Another PSU bank during the same period is down by 5%. Now your call on the PSU bank was right. But one investor bought Bank of Baroda, another investor bought Punjab National Bank. You know what happened to the person who bought Punjab National Bank and the person who bought Bank of Baroda. So I keep saying, and I'm giving you a live example with this live data I'm giving you, your decision which sector will do well is not sufficient for you to create wealth. You must also know within that sector which company is going to do well, and that's going to define what kind of wealth you can create from the equity market. So this is Bank Nifty components, and this is monthly performance of Bank Nifty. And I must tell you, for the benefit of everyone, if I was talking you in the month of June, that is here, the Bank Nifty was not the best performing index also. Because it did extremely well in July and August 2022, VC and banking stocks have again become a talk of the town. Today I was on CNBC Bazaar, and again I was asked a question on the banking sector, and I mentioned something similar. And if you look at last 6 months, that is from January, since post-January, I think it's almost gone nowhere. So that's a beauty. And out of 8 months, 4 months, Bank Nifty was up, and 4 months it was down. Now come to the very, very critical aspect, how the banking stocks perform, before I come to give you some insights about can Bank Nifty can outperform. Why? Because ultimately everything is a function of how you perform and what kind of outlook that we have on that particular sector. So how banks perform in June 2022 quarter? And I'm going to give you some finer points. I'm not going to bore you with some technical data because that's not my job. My job is to educate you, to make the complex problems simple. Am I right? And when you look at this is the first time, if you look at it, I'm talking about retail loan growth. And I'll show you some data which I've culled out from RBI website, very interesting data. And if you happen to listen to some of the commentary given by the bank's post June 2022 numbers, one thing is very clear cut. Retail loan is the name of the game, whether we like it or not. Okay, and I'll showcase you with data also, so you will get an idea in my subsequent slides. So I'm putting loan growth, and today market is more excited about those banks where there is a retail loan growth. Why? Because that's the only engine as far as credit growth is concerned, is firing from all cylinders. To some extent, even SME is doing reasonably well, but the large corporates have not borrowed money. In fact, on the contrary, the credit growth has come down. I'll come to that in a minute, to that data. Now, if you look at it, the retail loan growth I've taken various banks. HDFC Bank quarter on quarter 4.9, but overall growth is only 2%. What does this mean? That if you exclude retail, the bank growth, overall growth would have been much, much lower than this. Something similar happened with ICICI Bank 5.1 versus 1, Axis Bank 3 minus 1. So despite retail loan growth growing by 3%, their overall loan growth quarter on quarter decline. Okay. So retail is the name of the game for everyone. Today, if you speak to and if you happen to listen to the con call, and everyone is talking about retail, retail and retail. And I think that's one sweet spot everyone want to focus very aggressively. Second thing, how this NPAs have performed, I am happy to inform you that NPAs have more or less have improved for the most of the banks. So what it was then, so it doesn't make sense to compare Y on Y, the NPA. You should always compare NPA quarter on quarter, because वो 90 दिन के बाद तो नन NPA में आपको लेके आना पड़ता है. Doesn't make sense to compare Y on Y. You always compare on a quarter on quarter. And what you see in highlighted in a red font are those banks whose NPAs are increased as compared to the previous quarter. This data point, the reason I'm sharing this data point, so that will help you to understand the perspective about the banking more granular. And once I start coming to my, how do I see this, you'll be able to appreciate that. Now, when you look at this, only 4 banks where we have seen some increase in the NPA, but overall, the NPA level has improved in the sense the net NPA percentage as a loan has come down, which is a very good sign. Why it's a good sign? Because the people are repaying, and normally when the economy does very well, people have a tendency to, their ability to repay the loan is much higher. But there are two things which is happening, which we all know. One is the rate of interest have started moving up. That's number one. And as and when the rate of interest start moving up, it does create some amount of pressure on the NPA. Why? Because your EMI goes up. Number one. And either you increase the tenure to repay that same and maintain the same EMI, or you'll be asked to pay a higher EMI, which basically eats into your monthly budget. So that's what happens. So till June 2022, most of the banking as industry has improved the NPA level, and most of the banks have seen the NPA level. So this is just the reason you remember this data point, because when I come to the later part of my presentation, I want you to remember these data points, what has happened to the net NPA level. If you look at the net interest margin, it's very critical. Why? Because ultimately, the way we look at operating profit margin for the manufacturing, we should be looking at net interest margin. वो अच्छा है तो अच्छा है, खराब है तो खराब है. So it has increased. And where I see the bank NIM in the red font, that means it has declined as compared to the previous. Where you see green, that means it has increased. It's improved as compared to the previous quarter. And if you look at it, Bandhan Bank and AU Small Finance Bank, they have a very high NIM, 8% and 6% almost. Kotak, among the large bank, I think Kotak has a very good NIM, and that's one of the reason Kotak always commanded a rich premium as compared to some of the other private sector bank. IndusInd Bank almost at the same. So is the case with HDFC Bank, and so is the case with ICICI Bank. Axis Bank did see some improvement from 3.49 to 3.6. When you analyze any banking stocks, you look at what is a loan book growth, what is a NPA level, what is happening on the net interest margin. At the same time, we also look at ROA, return on assets. And globally, not only in India, globally, the bank or the NBFC that has a higher ROA, they will always command a better premium as compared to the bank or the NBFC having a lower ROA. So, when you analyze any banking stocks, look at two things. बहुत सिंपल कर देता हूँ आपके लिए काम. Look at price to book value and look at ROA. Something similar we also apply in our valuation parameters when we analyze banking and the NBFC stocks. And here you look at what happened to the ROA. Many banks have seen their ROA coming down. Am I right? As compared to the previous quarter, which is not a very happy sign, to be very frank with you. And that's data point you must again remember when I come to my CASA deposit. There's another very important parameter. Why is that so? You know what is CASA? CA stands for current account. SA stands for savings account. That is called CASA ratio. So they call it CASA ratio, current account and savings account. Why it is very critical? The higher the CASA ratio, remember what I'm saying, higher the CASA ratio, higher the margin bank can have, and vice versa. Why? In your current account, bank offer you 0 interest rate. और लेकिन आप तो पैसा लेन करते हो उसको लेके, am I right? तो आपका तो margin बढ़ गया because your cost of deposit very low. And savings, they normally pay you 2.5 to 3%. They don't pay more than that. Now someone would say, yeah, लेकिन CASA and savings is very floating. But that float remains for a longer period of time. So on an average, most of that, so today if you look at it, most of the banks, and not only I'm saying, all the management are saying, they want to keep increasing CASA ratio. So there is a race going on to improve the CASA ratio. You would have received many phone calls from some of the bankers, and SMS and WhatsApp messages, open an account. Why do the banks goes for a salary account? Because it gives you a very good CASA ratio to them. Because that money will remain in your bank account for some time because it's a salary account, am I right? And they will encourage you to open that and that kind of a stuff. It's a very critical. Now, I must tell you there is a challenge for many banks to improve their CASA ratio. CASA ratio is a percentage of total deposit. So 58.1, when you say of Kotak, out of total deposit, what percentage is accounted by the CASA ratio? That's what it means actually. Am I right? 58. So if they have 100 rupees total deposit, 58.1 is accounted by the CASA ratio, which is a low cost deposit. If they have that kind of a low cost deposit, when they lend money, the margin improves. And that's what it happens. And also, a CASA customer, you also get a chance to do cross-selling. And most of the banks wants to do cross-selling with their digital platform. And net profit growth. If you look at it, except 3 banks, almost every bank saw a decline in the quarter-on-quarter profit. So while net NP has improved, but the net profit has declined versus quarter-on-quarter. And SBI is one bank where you saw Y-on-Y and Q-on-Q decline. Y-on-Y doesn't make much of a sense because it was a very low base last year. But if you wish to look at it, then it's done extremely good job. And the cost to income ratio, higher the cost to income ratio, but not a good sign to do that. So these are this one. Now, every bank has seen. Now I'm coming to the diagnostic part now. How do I see this? I give you the data points. I explain you how banking did in June 2022 quarter. I also explained you how Bank Nifty did, what are the components, and so on and so forth. Now let's look at what is happening in the banking. I'm now coming to the broad industry level. And if you look at it, the most of the banks have seen their loan book growing purely because of retail loan. And within retail loan, the mortgage, that is housing loan, auto loan, personal loans and credit cards. And something we all must have heard, terminology called BNPL. You know what is BNPL? Buy now, pay later. So personal loans are unsecured loans, remember that. And hence, if there is a default, there is a higher chance of you basically not able to recover, and that increases your NPL level. SME is another one segment that seems to be doing very well, which is helping the banks to report growth in the loan book. But corporate growth is not there. And where it's not there, let's look at it. So this data I've taken, I think this is till August 2022, if my memory serves me right. And look at it. The total bank credit growth till is 2.2%. Am I right? And when you divide this 2.2 into industry, into service, and into personal loan. So personal loan is the highest 4%, then followed by services of 1.8%, but industry is only 0.5. And within the 0.5, if you look at the micro is 4.2, that's the highest, followed by medium enterprises. And look at the large. In fact, there we have seen the decline of 0.6%. And within that, it's very critical for you to remember this, jot down these points. The growth has been driven mainly by the personal, that's an individual. And within that, if you look at the consumer durable, 10.3%, housing is 3.4%, and auto, that's a vehicle loan, is 6.2%. And that's the basic genesis which is helping the banks to do higher loan book. Now, this is a very interesting chart, So, if you are analyzing any banking or any manufacturing company, you would look at uska raw material kya hai. Am I right? Is there a shortage of raw material? If there is a shortage of raw material, your margin will get impact. What is a raw material for a banks? Is a deposits. Am I right? वो पैसा आपसे लेता है, that is a deposit they take you, bank will take from you, either as a savings term deposits or a current account deposits, current account balance, am I right? And that money they will collect from you and they will lend to someone else. And they enjoy the margin of that. It's a very simple business if you look at this way, banking. Now what is happening? At this chart, I want you to look at very, very clearly. This data I've taken from the RBI, website. The bank credit is basically increasing at a faster pace. 14.2, 10.8, 8.4, And if you look at it, the deposit is declining. So क्या होगा? I need money to lend. If I have to grow, I need raw material. When there is a deposit growth is lower than the bank credit growth, what happens, I'll run out of the money. मेरे पास पैसा ही नहीं आएगा देने के लिए. मेरे पास पैसा आएगा तो मैं किसी को लोन दूंगा ना. And that's not a very happy situation to be in. So what happens? Either you need to chase more deposits to expand your top line. Okay. And how you can do that? Maybe you start offering higher rate of interest so that people will come to you, and once they come to you, you use that money to give money to the borrower. And when you do that, the person who borrows at higher rate has a higher probability of defaulting. And if you don't do that, your NIM will come under pressure. Very simple logic. And this data is not very comfortable. And due to that, what's going to happen? You look at this graph. the credit deposit ratio has started inching up. Of course, it's not touched a level that we saw somewhere in Jan 2019. Am I right? But it started inching up. It's a cause of concern. Whether we like it or not, it's a cause of concern because वो raw material ही नहीं मिलेगा अभी आगे जाके. You need to chase it. And I think that's, and second thing, what has happened, I was reading one article and I don't have a data to prove it, but I was reading one article which says that a lot of people have started moving out their money from the banks to mutual funds and other stuff. And that will further reduce the float available with the banks. So this credit deposit ratio is going up, is not very happy sign. And if there's any banker here, they can basically what we call give their opinion in case if they are banker here. So again, if someone is there, please pick up that question.
Yeah, sure.
Now let's look at the concerns I have for the bankers. I've explained you the retail loans has been the major driver for the loan growth book. अगर आपका लोन ग्रोथ बुक नहीं होगा तो आपका पैसा नहीं बनेगा, am I right? Because आपने पैसा लिया लेकिन कोई आया नहीं पैसा देने के लिए आपको लेने के लिए, तो where will you basically park that funds? If you park funds in a treasury or something, it's not going to make money for you, isn't it? What has happened? Many startups have started laying off employees. Why do this concern to the banks? But because these are same people who are basically willing to borrow money either through credit card, through BNPL, consumer durable, mortgage, or vehicle loans. Either they will postpone it or their ability to repay those loans comes under pressure. But that's not in isolation. If you have remember, IT companies have started reducing variable pay, whether it was TCS, Infosys, Wipro. I think this problem does gives an indication that going forward, there could be a demand problem for the retail loans. And if someone basically is willing to still grow, then is compromising on the quality of the loan book. I distinctly recollect Saktikanta Das making a statement almost 6 months back that some of the bankers who are chasing retail loan without assessing the risk properly. And when you wish to grow loan book and this one, and if you are not getting good customers, you will start compromising the quality of the customer, and that's where you get hit very high. So also when my salary get reduced or if I don't have a job, do you think am I going to go for a housing loan or mortgage loan? The answer is no. Will I go for personal loan? Answer is no. And even if I go, and if the banker is willing to do that, probably is very high that I am going to default that. So I personally believe that as far as the NPA levels are concerned, I think that we could see some amount of stress coming in by December 2022 quarter. And which is not going to be, market is not going to be very kind if that's going to happen. Number two, higher credit deposit means what? Every bank want to chase now. Customer को तो लेके आना पड़ेगा उसको चाहिए तो सही पैसा to lend the money, and they will either borrow at the higher cost, impacting NIM, that's net interest margin, or let it go for the loan growth book. नहीं grow करेगा चलेगा, but we don't want to grow the loan growth book. That's what could happen. Another challenge is that fintech and NBFCs. What Bajaj Finance did is a classical example of what kind of threat an NBFC can give and fintech. And fintech, I think people are underestimating, but this UPI is completely bypassing the many banks also. Of course, many UPI also linked to the banks, but we do have some of the other fintechs also. A lot of loan book are going to the fintechs, okay? And that's, I think, so they are not a very major challenge as we speak, but they are going to be the major challenge going forward. And this industry need to spend a huge amount in digital infrastructure if they really wish to take on with the fintech industry. Now, what can happen? when you spend on digital, उसका input output से तो immediate होता नहीं है. There is no instant nirvana when you spend, because you spend money on digital, you create the infrastructure. The benefit of that may or may not come. Even if it comes, it's going to come with a lag effect. And that's where your expense goes up, but it does not reflect on your top line. And that's why your profit comes down. This is the my concerns. But if you look at what has been outlook been given by the rating agency, Moody has maintained a very stable outlook for the Indian banking sector. They're considering the growing consumer and business. This survey, what the rating was done before there is a layoff by the banks, by the fintechs, and by the cut in the variable play. So, but they've revised their outlook to improving from stable for 2023. That's what the India Ratings and Research did that. Am I right? Because they continue to believe the credit demand will be robust and balance sheet of the lender is very, very strong. Even RBI says the very similar thing. They said that there is a sufficient capital buffers for the banks to suffer or withstand any shocks that could come. RBI also said that capital assets quality has improved, which is rightly so for the quarter ended June. But I believe that by December 2022, I think we could see some kind of a challenge on that. So that's so RBI and some of the rating agencies are very, very positive. Now let's look at the valuations. Two parameters which I was talking about: price to book value and return on assets. I again repeat, if your return on assets are higher, you can command a higher price to book value. Okay. And of course, then also is a question of perception about the management and so on and so forth. So if you look at Bandhan Bank has the highest return on assets, does it command the highest price to book? The answer is no, because there is some challenges in terms of the loan growth book and so on and so forth. But so anything about 2 is a very good data, return on assets. I must tell you that also. That gives a very good data to have. Anything about 2%. Price to book value, anything about 2 makes it very, very expensive. So globally, if you look at some of the banks which are commanding, they don't command price to book value more than 2. In fact, but here, like we have AU Small Finance Bank commanding price to book of 5.79, Kotak Bank 5.12, ICICI Bank 3.42, HDFC Bank. In fact, ICICI Bank has been a consensus buy. And what I've observed in my career, when any bank or a company which is a consensus buy, that means all good things are priced in. I'm not saying it's going to start underperforming from day one, but normally over a medium to long term, it starts underperforming very significantly. Today, if you ask any fund manager, or if you happen to listen to any expert coming on media, whether it's on TV channel or on a newspaper, everyone is gung-ho about ICI. Of course, the management did a brilliant job in terms of turning around. The new management did brilliant job despite having so much issues to go through post-Chanda culture. I think Baxi did a brilliant job in terms of that. But ICICI Bank seems to be a consensus buy, and that's where I get a feeling that a lot of things are already priced in. So the moment you go beyond 2 price to book value, I think you have to be very, very careful what kind of price you are paying. And if the moment it's higher, it reduces your probability of commanding the valuation, and hence you may tend to underperform. And many of these banks did underperform because they were commanding very rich valuation. Like HDFC Bank was commanding very rich valuation, and it did underperform. I think for the period of 5 years, HDFC Bank is underperforming, whether 1 year, 2 year, 3 year, 4 year, 5 years. Well, what does the Mojo score suggest at this point of time? So there are 5 banks which has a buy in our system. Not a single stock is a Mojo stock. I must tell you that. Okay. IndusInd Bank 84, Federal Bank 81, ICICI Bank 81, Bank of Baroda 77, SBI 72, and other banks are hold or a sell in our system. Okay. And if you look at our CFT score, Most of them I've seen a negative trend. Basically, CFT is negative there. Negative in the sense what it was there previously, the score has come down. Okay. FIs, we all know, and what you see April to May, June, July, 2 times, because this data we have taken from NSDL. NSDL discloses the data every fortnight, and that's why you see this two times. Okay. Now, FI partners and financial sectors increased in last couple of months. But has it gone back to the level which was there in April 2022? The answer is no. It was 15 lakh crore. Today, even despite this one, July, it's 14.42 lakh crore. So yes, it has increased from after touching near about 12.84 lakh crore, which happened in the June. It has increased by almost 1.6, 1.7 lakh crore. Additional increase has happened, but it's not gone back to this. So FIs have bought. And remember, if they, sometimes when you buy in Nifty 50, you're forced to buy banking stocks. Why? Because 25% of Nifty 50 is accounted by the banking stocks. So it could be more of a passive funds that could also be going in and putting in. So not necessarily that this is fund has been invested by the active fund manager to create an alpha. Now, you must also remember this banking, many of these banks do have a various other franchise business. Am I right? Some have a life insurance, some have a non-life insurance, some have an AMCs. Almost everyone has an AMC that can get value unlocking. Some of them have NBFC like HDB Financials that can go this one. Some have a broking. If you look at HDFC as a broking, ICICI Securities anyway listed entity. Kotak Securities is a listed, unlisted, but is a broking business, and so on and so forth. So there is a possibility of some of these banks can create value unlocking. HDFC Bank did value unlocking with the life, AMC, and the non-life business. Of course, the NBFCs and broking is still not been listed, but there was this news that HDB Financials can do value unlocking. Kotak, none of the Kotak, whether life, non-life, AMC or a broking is a listed. ICICI Bank did unlocking by listing its life and non-life and the broking businesses. Axis has only banking as a listed entity, and they could unlock the value of the Axis Security, which is a broking business, and also the AMC business. Of course, AMC business ran into some amount of a problem, but otherwise this can. So when you value banking stocks, you should also look at what are the other franchises that they've created before you decide invest in those companies. Just a metrics, just to very quickly before I come to the concluding part. The cost of borrowing, you should look at it. If it is lower, the better. Cost of lending, higher the better. NPA levels, lower the better. ROE, higher the better. Price to book value, कम है तो अच्छा है, but of course you should look at with the in conjunction with the ROE and the franchise business which I was talking about, like broking, life insurance, and so on and so forth. So what is our sense is getting right now? Our sense is that right now, looking at the valuation where some of the banks are commanding a very rich valuation. In fact, they are commanding very rich valuation even by the global standard. And growth is going to be remain a little challenging for them. And we do believe it doesn't make sense much to remain bullish on the banking sector as a whole. There is a high probability that Bank Nifty from this level, from today onwards, and I'm not talking about 1 week or 1 month, okay? But I do get a sense that they will underperform in next 6 to 12 months. Why? Credit deposit ratio is going up. That means you need to chase the deposit at a higher cost. Second thing, the personal loans, the proportion is increasing. That could be an area of concern in terms of NPA, which can result into an NPA. And the higher rate of interest normally result in higher NPA. Yes, that doesn't mean that every bank will underperform. They will, a few banks that can do well, but the most of the banks will underperform. PSU Bank, and I must tell you because I do listen to some of the experts, they have done extremely good job, and they've really done. And some of the experts coming on TV channel saying that now it's an era for the PSU Bank. Whether we don't know whether there could be still more merger that can happen where PSU Bank can be merged into one to another, or there could be a privatization of PSU. That's a wish list of government. Whether that will happen or not, we don't know as we speak. But I must tell you, be careful with the PSU Bank. Why? Because that is one segment which is heavily under invested in terms of technology. And if they've underinvested in technology, the name of the game is a technology. So let me give you one example that you people can relate to it. We all know what has happened to the broking industry, am I right? Broking was more of previously it was outcry system. You need to give it your order to your broker. Broker in turn will go to the ring and will execute your trade. Then become a branch, then the broking become online, but not internet based, where you need to go to give an order to the broker, and broker will punch online and will do that. And then we saw do it yourself kind of a broking, while the broker will give you the platform, the site, you go punch your order and execute it. You don't need your broker as an intermediary to take out your business. You'd be surprised to know that India's top 3 brokers are those brokers who were not existing 20 years back. And these brokers are only online. They don't have any physical presence. Something similar will happen with banking sector. Today, एक छोटा से छोटा जो सब्जी वाला भी है ना, basically using UPI. In fact, today Harsh Goenka has created a very nice thing. So in marriages, people used to, वो घुमाते पैसा सर पे, वो क्या बोलता है, I don't know what is it called, and they will give it to the person who basically plays, what we call that, musical instruments, dholak and everything. Okay, तो आप उसको पैसा देते or that. Now people have started using UPI, वो scan करके उसको खाते में बता देता है. So I think digital is going to be the big thing, and I'm afraid, and this is a contra view, so please pardon me if I go wrong, because most of the market believe that PSU banks should do very well. They are heavily underinvested in technology, and that's where they're going to pay very heavy price in terms of their, when you invest in technology, your data mining, your risk assessing capability of a lender, of the borrower, goes up significantly. Second thing, you'll be able to attract more CASA deposit, other things, if you are more digital focus. Unfortunately, I don't see many PSU banks are doing. So of course, there are 1 or 2 are doing well. I'm not disputing on that, but most of them are heavily underinvested. And I do get a sense that there will be a huge divergence in the PSU bank's performance. As we saw, बैंक ऑफ बड़ौदा भी PSU बैंक है, पंजाब नेशनल बैंक भी PSU बैंक है. बैंक ऑफ बड़ौदा ने 2022 में 55% रिटर्न दिया, पंजाब नेशनल बैंक ने -5% रिटर्न दिया. एंड दिस ट्रेंड विल कंटिन्यू गोइंग फॉरवर्ड. सो डोंट बी गेट टू मच एक्साइटेड. अरे PSU बैंक चल रहा है, लेट मी गो एंड बाय दैट. Probability is very, very high that you will, wrong selection will cost you very heavy. So my advice to all of you, yes, July and August, the banking as a sector has done very well. Bank Nifty has outperformed. I do agree with you. But will they continue to outperform going forward? And again, I'm making a statement. This is not for 1 week or 1 month. But 6 to 12 months, I think they will underperform. I did prediction in August 2021. At that time also I said the same thing. In August 2022, I'm making the same statement. And hence, be careful what you are buying in the banking space. If you don't know what to buy, use Mojo stock, use our model portfolio, or use Mojo Infinity. With this, let me tell you that our Azadi offer is over and we are back to our normal scheme of 19,999 for 2 years, which comes at a massive 50% discount. But please mind that this does not include model portfolio and portfolio optimizer. I'm requesting my colleague Adrian to please drop the link so that you people can subscribe at 19,999 for 2 years. With this, thank you everyone for your time. Let's open the floor for question and answer. Over to you.
The first question is from Mr. Jay Krishna. Karur Vyasa Bank has been on my scanner. Mojo score is a strong buy, but it has run up very fast. Is it okay to enter at this level?
So I think Karur Vyasya Bank is a buy in our system. If you already bought it, sir, continue to hold on. Fresh buy, I would recommend, sir, to be very frank with you.
The next question he has mentioned to keep him anonymous. Please keep me anonymous while asking. I work in SBI, but do you think when SBI gives out unsecured loans to various big companies which are in high debt right now, do you think such things can impact the share price if they default in the future?
Of course, sir, definitely. And I know which corporate you are referring to, so let's not discuss that. But yes, very much it can impact. And that's why we need to be very, very careful about what we are doing it.
The next question is from Mr. Rupesh Prajapati. I'm a 15-year professional subscriber and I want to invest 20 lakh in Infinity Soul portfolio. What amount of fee will be charged on 10 lakh investment if I migrate 10 lakh from my existing model portfolio and personal portfolio to Infinity Soul? And is it the right decision because Soul is back-tested return of 55% and not real return, whereas last 5 years like model portfolio?
Sir, you are investing 20 lakhs. So whether you transfer from model portfolio or whether you transfer your personal portfolio, you put additional. Infinity Soul, 20 lakhs pay, you will be charged 0.75. That scheme is still on, am I right? 0.75%?
Yes, it's on right now.
Yeah, so you can avail that offer because that offer will get over very soon. If you miss that offer, then it's a 2%. So I make it very clear cut to you, sir. Then 1% every 6 months and right now, and after 6 months, only and only if your portfolio is above the 20 lakhs plus the fees that you have paid. Otherwise, you don't want to pay for that fees. So 0.75% on 20 lakhs, they will be charged. Now your question is that, is it a right time decision to... So Soul is a high risk, high return. So if you are not very comfortable with a higher risk, you should not come to the Rupesh ji in a Soul portfolio. Number one. Number two, I believe that you don't need this 20 lakhs for next 3 to 5 years. And if answer is yes, then only you should invest in. Otherwise, don't invest. And now your question is that, you know, the 50% back tested. Yes, you are right. And the model for the real returns, you are right, absolutely right. What we have observed that our backtesting returns and the actual return doesn't vary too much. Of course, it can vary depending on the market cycles also, but normal doesn't vary too much. So you should expect higher returns as compared to the model portfolio. That's what we are very sure that Infinity will always give you higher returns as compared to model portfolio. Now, how much return it gives, what it gives, whether it's mimic what has happened to the backtesting result, it's very difficult to say. So your concern is right. कि ये तो बैक टेस्टिंग है, वो होगा कि नहीं होगा, no one knows. Even we don't know whether होगा कि नहीं होगा. One thing which is very certain, we are very confident of that, is that it will always give you higher returns as compared to the model pool. That's what our sense is.
The next question is from Mr. Rahul. Will RBI also go for a 100 BPS hike in the times ahead?
Sorry. What RBI will go for? No. Rahul, I don't think. So my personal opinion, we would see one more rate hike, last rate hike from the what we call RBI, and then post that there will not be any more high rate hike. The reason is very simple, because inflation seems to be coming under control, and in fact RBI governor himself made a statement that inflation seems to have peaked. So if that is so, there is no reason for RBI to go a little aggressive and keep hiking rate of interest.
The next question is from Mr. Hitesh. If there's a hard landing coinciding with these increase in interest rate, the situation might get worse. Can you please share your views on that?
Hitesh, is your view on the US or is your view on the India? I don't think. In fact, there is one nice analysis done by Bloomberg which says that probability of India going into recession is 0. Okay. So I think you are referring to the what we call US. If there is a hard landing, then there is a problem for the US. I do believe that Europe, US, and China are going to face a lot of headwinds. Whether they do hard landing, not hard landing, is very difficult. But one thing which is emerging very strongly is that India going to be the signing star for the world economy. And if that is so, the investors, whether Indian or foreigner, will have a little choice but to ignore Indian equity market. And this is purely because Indian economy will show a lot of resilience to take on the global challenge. Of course, there could be an impact, but the impact would be minor and it would be very short term.
The next question is from Mr. Jugal. Kotak Bank share prices is heading close to 2000. Does the stock still have an upside potential?
See, if you look at from the risk-reward ratio point of view, I think, and the valuation that it has been commanding, it's commanding a very rich valuation. So right now, our score says it's a 55, it's a hold. But if you ask me very frankly, I would rather prefer to invest in Mojo stock than the Kotak Mahindra Bank.
The next question is from Mr. Dheeraj. Will these interest rate hikes work in the favor of the banking sector?
See, normally my sense is that there are two things that comes in the picture. One is that your treasury income will come down. Why? Because when the yield goes up, what you're holding, the valuation of that comes down. So that is a temporary impact. But the bigger impact is that two things happens. When the rate of interest start increasing, your loan growth comes down because people are not willing to borrow at the higher rate. And number two, your NPA level goes up. So till certain time, it will be beneficial. And once it crosses the certain threshold, then it started negative impact on the banking. So I think my answer, if it's sustained for a longer period of time, it's a negative for the banking sector.
The next question is from Mr. Nayan. Great presentation, sir. After looking at the webinar, Federal Bank seems like a good investment opportunity. Can you please share your views?
So yes, code does says it's a good, but it's not a mojo stock. So if you already have Federal Bank, you can continue to hold.
The next question is from Mr. Zahir. I had brought SBI around 200 levels, but later I got out when it hit 400. Should I invest in SBI again as it is a buy on MarketsMojo?
Yes, it's a buy in our MarketsMojo. So if you already got out, see, as I told you, Zahir is not a mojo stock. And my first preference would always be mojo stock. Once I get exhausted with the mojo stock, then I would prefer to go with non-mojo stock with a buy. SBI, even though it's a buy, it's not a mojo stock. So the simple answer, fresh buy is not recommended. But if you already hold, then you can continue to hold SBI.
The next question is from Mr. VK. Why do you recommend strong sell on CESC? It has a strong balance sheet and a very good dividend yield.
So the reason we are saying is basically based on the score. There is no human emotions there. It's not that I want to say it's a. If you look at it, the technical indicators are suggesting mildly bearish on this one. If you look at the quality, it's below average for CAC. If you look at the valuation, is very attractive. I agree with you. And the financial trend is negative. So out of 4 dots, 3 dots are red. And if that is so, that's why it's a sell. Very simple philosophies are there. So it's not I am saying, sir. It is our score based on our IP, which said that this company will underperform. And if you look at it, CAC has underperformed, whether it's a 2022, that is YTD, 1 year, 2 year, 3 year, 4 year, 5 year, and even the 10 years. So if that is so, why do you want to invest in a company which is going to remain underperformer for a longer period of time?
Sunil, the next question is from Mr. Arora. What percentage of the banking sector one should have in their portfolio?
So, sir, normally we say one should, so this is not only for banking, I'm saying in a normal, Arora sir, always have not more than 30% exposure to one single sector, 30%, 30. And single stock 10%. The same logic applies to the banking. But this 30% limit should be when the sector you have an outlook is very positive. Right now we are not very positive about the banking, and I wouldn't recommend 30%. So 30% is when you are extremely bullish about that particular sector. Am I right? So right now, though, the the best case scenario would be 10%. Best case scenario, not more than 10%.
The next question is from Mr. Mitesh. The Nifty PSU Bank Index is performing well lately. Which stocks would be a good buy from that index?
So look at the score of the bank, of PSU Bank, and that thing you should do that. As I was explaining you, within the PSU Bank Index, we have seen a huge divergence happening. Stick with some of the large PSU banks. That's what my advice would be, because they would have a better resilience to take on the competitions from the fintechs and the likes of big NBFCs. Some of the lower what we call the mid-sized banks will extremely find it difficult to either attract the talent or deploy the money in the digital journey. And I think they're going to be remain big laggards in the months to come, in the years to come.
The next question is from Mr. Kunal. I was planning to apply for a loan, but will the interest rates go further high from here?
Yes, sir, Kunal, it will go up. As I told you, we do expect 50 bips rate hike in the next RBI policy. So if you wish to go for a loan, maybe you should go for a fixed loan. But if you have I don't know what kind of loan you are going for. But post the 50 bips rate hike, we do believe that in 2023, RBI would have started cutting the rate of interest. So there is some pain that you would see for a couple of months more. Post that you should be fine. But if you are applying for a personal loan, I'm not a very big fan of personal loan. I also suggest you people, if you happen to use a revolving credit on a credit card, please don't do that, because it works out to very, very costly affairs. So that's what my advice. But if you are going for housing loan or something, please go ahead. I don't think it's going to make much of a difference. Just be mentally prepared. Okay, you don't need to pay at least for 6 months or so higher rate of interest, and then post that the rate of interest will start coming down.
The next question is from Mr. Rajesh. Sir, I'm a Mojo professional member since June 21. I have subscribed for 8 years. My question is about Coromandel International. There is a vast difference between your fundamental and technical call. The fundamental suggests a strong buy, and before 3 days your technical call suggests a sell call, and it may go to rupees 930. So I'm confused because I already have brought this stock at 940, but I am confused on what should I do. Should I sell or should I hold?
Very good. I'm happy again you have picked up this question. So I think not only you, sir, but I will address everyone whenever you face this kind of a dilemma. So we have two websites, am I right? In our Mojo professional subscription includes both site. When you come to MarketsMojo.com, and when you see a buy or a sell, it's not a function of only one technical dot. It's a function of fundamental, which is quality, valuation, and recent quarterly financial performance. Plus, it's a technical. And within the technical, we use 7 different parameters to evaluate the stock based on technical. There is another website called trading80.com, which purely works on technical, which is very short term. You would see weekly calls and you would see monthly calls. That's it. Okay, with the target pairs and stop loss. So the logic of both are different. So you could also see other way around, where we could see a sell on MarketsMojo and buy on a technical. That's also possible. So trading it is for trading, not for investment. So when you invest in stock, you should use MarketsMojo website and score. When you want to trade for a short term, maybe for 7 days or 1 month, ignore what we are saying in MarketsMojo website. Look at only trading80.com, because both has a different purpose to serve. Am I right? MarketsMojo for investment, trading80 for trading. So that's the thing. And hence, there could be a difference in terms of recommendation both these are. And it doesn't mean that one is right and one is wrong. Both could be right. Why? Because Coromandel can give capital appreciation after touching the target which trading80 must have given. So that's also possible. Why it's a very short-term call trading80 would have.
The next question is from Mr. Jagmohan Singh. I am holding ICICI and HDFC with decent percentage return. Would you advise to hold or should I move out?
HDFC definitely, sir, you should move out. ICICI Bank, maybe you should wait for some more time before making an exit. And as and when our ICICI Bank score goes to hold, maybe that's a good time for you to exit and lock in your profits.
The next question is again from Jagmohan. Sir, here are you only talking about banks or including NBFC like Bajaj Finance and Chola
I'm
Finance?
only talking about banks, sir. This Bank Nifty, that's why the heading of this webinar is Bank Nifty. So I'm only talking about banks, not NBFCs, sir.
The next question is from Mr. Menon. Will I be able to convert my moderate and aggressive model portfolio into aggressive with stocks from personal portfolio? How to go about this? Is there any demo available?
Will I be able to convert my modern aggressive model portfolio which is to aggressive? So basically, you want to move from moderate to aggressive model portfolio. That's what your question is. And with the stocks, I said, I'm sorry, I'm not a little confused with your Menon sir, with your again. Have you understood what the question is?
Yeah, he wants first is whether I am able to shift from moderate to aggressive in terms of moderate portfolio, in terms of model portfolio. And the second question is, can I shift from personal portfolio to model portfolio?
Okay. So is it available again?
Right now, it's not available. It's a part of our next.
No, it's a part of our next phase of this one. So, sir, this is not available. But I would strongly recommend to attend my colleague Karan Batla's webinar about. So, sir, what is available today is that you can convert your personal portfolio into Mojo Infinity portfolio. You can convert your model portfolio into Mojo Infinity portfolio. And we have come out with a very attractive offer of 1.5% per annum for the lifetime on the amount that you transfer or invest right now for the lifetime, and we'll charge you only 0.75%. In the second development, which is in a development stage, where you have asked the question, sir, that would be made available. It will take some time, but it's a work in progress.
The next question is from Miss Priya. Sir, I can see in the website that you have stopped the Azadi offer. Can you please extend it for a week as an exception? I was busy with a pilgrimage, just came back home.
Priya ji, I must tell you, I'm extremely sorry. I wish I could accept your request, but I'm extremely sorry. We don't have that. The offer is over. In fact, we extended because our technology team was busy with some other thing, and it did not have a time to change the offer. It's already over, ma'am. I'm sorry. I will not be able to extend this.
The next question is from Mr. Ashwin. Dear Sunil sir, will global impact affect our market substantially, and your market outlook still is it still intact till December?
Yes, sir. My outlook. Let me repeat for the benefit of everyone. I do expect sentiments has to be much better by October 2022, and I do believe that Sensex can touch 65,000 by December 2022.
The next question is from Mr. Anil Ahoja. What are the risks being faced by banks in the retail sector, and when private sectors are not likely to participate significantly in the capex of India? PSU banks are likely to take a lion's share of capex. How do we justify the growth of banking sector only in the private sector bank?
Sir, I'm not justifying that banking on the private sector, Anil ji. So, what are the risks being faced by retail? I think one big risk in retail is the NPA. And I think that one risk one has to be layered because everyone wants to chase now retail loans. And sometimes you want to, because everyone has been given targets. And when the targets are not met, what you do, you try to cut corners to ensure that, targets are met. And that could be one big reason we could see some NPAs increasing within the retail. I'm not very sure, sir, that when you say private sector banks are not likely to participate in significant capex of India Inc., what makes you believe that, sir? I don't think so, that they will not. They will definitely be participating. Of course, they will look at the credit assessment of the project, the capex that the India Inc. wants to do that. And depending upon what kind of a project is available on hand, I think they will take a call. So I don't agree with that private sector banks will not participate in the capex of India Inc.
The next question is from Mr. Yashankar. What is your take on an SIP in Nippon Banking and Financial Services?
Which one?
Nippon Banking and Financial Services.
Sir, if you want to play onto SIP route and mutual fund, go and do banking finance. I do believe that they may continue to underperform for a significant period of time. So choice is yours. If you ask me, yeah, I would rather do SIP in Nifty ETF rather than banking and financial services. Why? Because you are taking a thematic view. Sometimes it plays out well, sometimes it doesn't play out, so your risk is a little high. It's safe bet is to go for Nifty 50.
Sunil, we are done with the Q&A.
So thanks a lot everyone taking time out. As I told you, we do have a 19,999 for 2 years offer. Please note that this does not include model portfolio or portfolio optimizer. I'll request my colleague to please drop a link so that you can avail this offer. Thanks a lot, Agent, for hosting this webinar. Over to you.
Thank you everyone for attending this event. We have a special exclusive marathon Q&A event for the Infinity customers tomorrow at 6:30 p.m. Please do attend the upcoming webinar as well. Thank you and goodbye.